2012 was a year of fits and starts. It ended very strong in terms of M&A volume compared to 2011, but overall the year was down. So 2013, we're very optimistic heading into it. The reason for that optimism is you've got increased cash on corporate balance sheets. You've got record amounts of dollars sitting in private equity funds. And most importantly, you've got a financing market that's open and available to finance the transactions. So then you move to, boy, that's the oil that primes the pump, and then you move to what's the supply, so how are we going to get more transactions? And really you've got an improved level of consumer confidence, you've got opportunities in emerging markets, and so overall we're very optimistic about 2013. I think 2013 will be known as the year of growth. The respondents to our survey were all consistent, whether it was growth in new geographies, growth in product lines, growth in customers, but it was all about growth. I think that really contrasts with some of our historical surveys where people were looking at acquisitions more from an ability to scale an operation and achieve some cost savings, whereas this year in 2013 and beyond will be known as growth.
We've certainly seen a large number of transactions in the middle market space, both with respect to PE buyers and with corporate buyers. They tend to be more popular as the economy stabilizes because of perceived lower volatility and lower risk. Middle market companies are clearly an attractive add-on, both with respect to service lines and product lines for potential acquirers. However, as we see unemployment drop, economic issues in Europe stabilize, we expect to see larger deals return. However, in 2013, I fully expect middle market deals to continue to dominate the market. Based on what we're seeing in the marketplace, I expect to see substantial M&A activity in technology, healthcare, energy, and financial services. Technology, which is constantly evolving, is a marketplace where buyers are always looking for opportunities to be a market leader. The healthcare industry, as they respond to their new regulatory requirements, will also result in new and increased investment activity. And both energy and financial services companies are dealing with significant regulatory challenges, which will result in significant changes to their business models, which are likely to lead to both increased sell activity and buy activity in that market.
Well, obviously tax issues are crucial at every stage in a transaction to deal makers. And I'd say that our respondents agree. Maybe 75% of them said that they look at tax issues at the outset of a transaction. But keep in mind, it's not just at the outset, it's at every point in the deal life. It's from conception all the way through to post-transaction integration. The issues that you have to look at, you're concerned from a federal and state tax perspective. You need to figure out the residence, or where the entity is actually domiciled, and whether that's international or domestic. Even if it's domestic, you need to look at the individual states and look at the state tax exposures. You need to consider the transfer of the assets to the entity and what order those assets are transferred. You need to think about the payout schedule to the stakeholders. And then even at the inception, even when you're planning the deal, you need to keep an eye on your exit strategy longer down the road. And then I'd say also the regulatory scrutiny from both a domestic and a global perspective, it's the highest it's ever been, and it makes the environment even more challenging. Considering tax implications has a major impact on the way you structure any transaction, and perhaps more importantly, on the overall return to the investors. Any M&A transaction, whether it's a merger, an acquisition, a disposition, or a restructuring, has tax implications. And we've seen unanticipated tax implications prevent a deal from achieving its expected value. On the other hand, a thorough, coordinated approach to structuring for your tax implications can have the effect of maximizing a deal value. And that's exactly what our clients expect from us.
Our survey respondents were all consistent in that 2013 would be much improved over 2012. I believe the favorable financing markets, the amount of dry powder, the regulatory changes that will continue to drive M&A activity are all favorable for 2013. But I think the single most important part is the amount of consumer and CEO confidence. as that continues to improve, I think we'll see an improvement in 2013 M&A volume.